Ben, welcome back to F.A.C.E.
Hey Dale, how are you?
Okay, buddy. So I want to warn people that to get the children out of the room. And if you're squeamish, you also want to leave. And if you only want, good news, everything's going to be okay. This is not the interview for you. So go ahead, Ben.
Hey Dale, yeah, thanks for the
Yeah,
disclaimer. I come bearing gifts. Let's say
yeah.
these.
So, I'm just telling people that prepping them for it. I mean, I think people feel it in their bones. So go ahead. Let's get into your cycle work, Ben. Always great to hear you. I will acknowledge a lot of the things you talked about, and gosh, I remember you being here in the room during F.A.C.E. and beans were trading around 12, and I asked you if you thought that was it, that pullback, and you said yes. I think maybe it got 11.50 or something, took out 12 a little bit, but smoke and beans are where, $15 now?
Yeah. I mean, I think we'll get into the grains, but
Okay.
short term, I think they kind of made a peak. I was looking for a high on Monday. The high came yesterday. But the overall theme is, inflation is not going anywhere. And all the theoretical things that we've been worrying about, the cycles are pointing to them coming to fruition this year.
Yeah, well, it was a lot more entertaining and fun talking about them being something in the future.
That's right.
Than being right in the middle or the beginning of a lot of these things manifesting. So anyway, maybe there's some steps that people could take that might be important for their families and for them. So I'm going to shut up now, buddy.
And no, absolutely. I think that's the important point.
Yeah.
So let's look. Here's what we're going to cover today. I've for those who've heard me speak before, I'm going to touch on the major cycles that we're being affected by right now, because I believe they're the driving force of everything that's going on. It's sort of the background weather and the frequency, and it gives you the idea of what is most probable to happen. So we'll cover the major cycles, which include the epic cycle and the 1970s analog that we're following. We'll go over the 2022 themes. Part of the theme is new directions, and we've already seen a couple of major ones in the first quarter that we'll review. I'm of the mind that, like the 70s, we're going to experience another energy crisis, and we're in the middle of it, and it's only going to get worse. And then, as I said, inflation is here. It's not going anywhere. So I want to highlight some of the markets and ways you can protect yourself and benefit from the inflation that's here and coming.
Yeah, the Fed could raise rates 100 times, and I don't think it's going to affect something that depends on weather and not the Fed.
That's true. And that we're seeing that, or the availability of fertilizer, like in the grains, which we'll talk about. Yeah. So the epic cycle is a 400-year cycle that we are currently in the last several years of. The reason why this is important, and you can see it in your everyday life, is this cycle was about the development of and the organization of societies and countries and the world, essentially, where large centralized institutions gave us support and structure and sort of governed how we operated. Well, we're currently at the end of that cycle, and these institutions are failing, they're fragmenting, and people are seeing it every day in the things that they use, and the things that they used to depend on, they can no longer depend on them. And in my opinion, we hear the term the Great Reset. This is the real Great Reset, not a group of people in Switzerland trying to control the world or whatever the conspiracy theorists talk about.
Gnomes.
This is really the Great Reset.
It's the gnomes, man. Or the Trilateral Commission. Or you know what?
What's that?
Yeah, you'll hear it in this country now with all the racism in the country. It's who were the Rothschilds? Build-A-Bear, Anthony. Yeah, the Bilderbergs.
There you go.
All right.
So
just one question. Interesting. Why was 1616 a seminal year.
It's just the way where the cycle went. I have no idea why 16-16 and not 16-14 or 16-18.
Okay.
It's how the cycles fell.
There you go, Curve.
Here's some examples of things that we used to rely on, used to believe in, used to have faith in, which are now failing.
Yeah, you nailed the Fed a few years ago before all the scandals and everything.
The scandals and now their ineffectiveness is going to be exposed. And that's what I think the next big thing is. But anyway, there's those things. We've reviewed them before. You can people can probably add others to the list because every day we're seeing more and more of these institutions fail us. The 70s cycle, I can sum it up in that, the cycles we're going through now are the same as we experienced in the 70s. And while they don't exactly repeat, they do rhyme. And we've seen a lot of the rhyming. We had a Republican president who was not very popular, Richard Nixon. We had Donald Trump, who was a Republican president, who was not very popular and very polarizing. And here's some of the things that happened, in each of their reigns. And you can see it's, a lot of similarities. What we're currently experiencing is what happened after Nixon. We got Jimmy Carter. Well, what happened after Reagan? After Trump, we got Biden.
Yes.
And the similarities just continue to come. Like recently, with the Canadian truckers and their protest. Did you know that there was an Australian trucker strike in 1973 and 1979 that had a dramatic impact on policy in that country?
Like what's going on now.
Exactly what's going on now. The other one is, while our athletes are going to be at the Beijing Olympics starting on Friday, no government officials, no diplomats are going to be there. So we are boycotting, in a sense, those Olympic Games, just like Carter boycotted the Moscow Olympics. I believe we're in the early stages of the second leg of this energy crisis, and the 70s were obviously famous for a major energy crisis. Gas lines, odd license plate numbers for getting gas, all that stuff happened. The stagflation, I think, is also going to really become not theoretical this year, but become reality, and we're going to see that. So, given
could the 2020s, Ben, make the 1970s look like the 50s?
Wow, that would be something, wouldn't it?
Magnitude and everything.
Yeah, we'll talk about this in the outlook here. You can see the themes for 2022 are not great. Limitations, shortages. We're going to continue to see them. We've seen them in semis. We've seen them in workers. We're going to see it in food this year. It's not going to be theoretical. We're going to see it in food. Right now, what's happening in agriculture is farmers are not growing things because they can't do it profitably because the cost of fertilizer has gone through the roof. And so we haven't even seen the effects of that yet, because it's going to affect this year's plantings. So we're going to have, that's a reality. Other things that are going to happen, we're going to have shortages of is growth, liquidity, economic things that we need, to have good markets and a good economy are not going to be there. So that's the background weather. While it's good for commodities, right? When you have shortages in commodity markets, that's really good, right? Prices go up, right? If demand is stable and supply is down, prices go up in commodities. So this is going to be good for commodities. It's not going to be good for the economy, and it's not going to be good for society. So that's the first one. The second one I think is really, really important, and Steve would appreciate this because Steve's been talking about this for years. I think we're finally going to have a realization that this model of eternal growth not going to work. All modern systems have been built on this principle. Sort of the more philosophy is based on eternal growth, and that it's not going to happen. And the cycles are set up to where people are going to start realizing that this year. Because what if Dale? What if we all known all our life that has been told us is that the future is always going to be better. right? The next generation is going to have it better than the previous generation.
Yeah.
What if that's not true?
Well,
What if people don't believe that anymore?
Yeah, like the millennials now.
Right.
Yeah.
What it could lead
I
to.
used to believe it.
Yeah, I know, but
What,
you can see that it's
wasn't
possible
true.
that it's not true, right?
Yeah, I'm sure there were, in all generations that, some make it, some don't. Everyone has highs and lows and cycles, but yeah, it's a little different. I guess younger kids right now, they don't want to own a house. It's a lot of responsibilities. They'd rather rent. But the growth of consumerism, is more, not about age or it's the demographics are working against us too.
No
So,
question.
so it's consumption. Are you saying that people are going to pull in their horns and not spend because of what they see happening at the grocery store and with their utility bills and um, sorts, so they don't have as much disposable income and there are no government checks coming anymore?
I think that's a true statement that you just made. The bigger issue here is that if this belief in that the future is not always better becomes pervasive, we could have an emotional crisis.
Yeah.
Where there's sort of hopelessness, right?
Yeah.
People don't, why are you going to live for tomorrow if tomorrow is going to be worse?
Yeah.
So that's a possibility. And the way the cycles are positioned now, it looks like the next crisis is going to start in March, some point in March. I don't know what it's going to be. I don't know what it's going to be about or how they're going to do it, but March looks to be the next time. The other thing
we have the situation here with Ukraine, Ben.
Mhm.
In the epic cycle, is there a war cycle feature in it as well?
Well, as the key thing is, as the societies disintegrate, right, as the infrastructure and the things that they've depend on and the organizations that they've depended on to provide certain things for them fall apart, what's human nature do right then? You look for somebody else to blame, right?
Yeah.
So you blame your neighbors,
right.
You blame people you don't like, people who are different than you, people who,
other nations.
That's right. So it could lead to that sort of kinetic conflict between countries and societies and within societies. The other thing about this myth of eternal growth being shattered is we have to watch for frauds are going to be exposed. And it happens in every cycle. Like if you remember in the .com crash, that's when Madoff got exposed.
Yeah.
Right as that started unfolding.
Enron
kicked off another one.
Yeah.
Frauds are going to be exposed because if people start doubting this eternal growth thing, they're going to start looking deeper into things and they're going to find the frauds. So that's another sort of signpost to look at in this part of the cycle. The next one is volatility. And I think, everybody understands volatility in the markets, but there's also going to be volatility in society. And what do I mean by that? Is that there's going to be sudden changes in the directions we go. Like we're going to be going one way on an issue in one moment, and then we can change suddenly and quickly to going in the opposite direction. And I'll give you a couple examples of that in the next slide. There's going to be emotional extremes. The good news for traders who have a system and who have discipline, this is going to benefit you, right? The last few years, matter of fact, the last 13 years, all you had to do was buy the dip and you were a genius and you made money. And if you stuck to your system and you tried to, sell resistance and buy support and do all this stuff that disciplined traders do, who've been through bear markets do, you underperformed. Well, I think that whole thing is reversing. So having discipline, having levels, having, risk reward requirements when you enter a trade and exit a trade, those are all things that I think are going to come back in vogue. Power, might, and violence. This is all about I think, controlling the narrative. We're going to see much more efforts and more sort of extreme efforts to do this. Also, this has the earmark of total intolerance for any dissent, or any dissension at all will not be acceptable. And you see what's happening to Joe Rogan. You can see this stuff ramping up, and it's gonna ramp up more and more throughout the rest of this year. So that's the lovely picture that the background weather is showing for 2022. What do we do with it now? Well, let's look. New directions create new opportunities. Here's a couple in the first quarter that you can already see evidence of it and things happening with COVID policies and attitudes. I believe that they're no longer, the authorities are no longer going to be able to use COVID as an instrument of fear to get people to do things. I think that's done. We're seeing countries, companies.
They're in the streets.
And they're changing their policies
everywhere. Yeah.
You know, if you look, there's Switzerland, Czech Republic, Denmark, Sweden, UK, Netherlands have all gone back on restrictions or lifted them entirely. A company like Starbucks, which is not the epitome of conservatism, no one would accuse them of that, scrapped the vax mandate. They scrapped it.
Yeah.
And it's all happened, you know, about mid-January when these cycles shifted, that we started to see this change in attitude. And I think we're really transitioning from a pandemic where there's a crisis to an endemic where we're just going to live with it. We're going to live with it. We're going to protect the vulnerable, and then we're going to let people live their lives again. Now, the powers that be, the power, might, and violence that we talked about, they're going to push back on it, and they're going to try to continue to control, because it's about control. But I don't think they're going to be able to use COVID, which is why I say the next crisis starts in March. Don't know what it is, but that's when the next one is. Another major change in direction is not only Federal Reserve policy, but central banks all over the world. And Blake said this yesterday, and I typed in the chat. I said, "Oh man, you're stealing my thunder for tomorrow." The party is over.
The punch bowl taken away.
It's gone. I mean, the cops are there. If you haven't slipped out the back door where the kegs were, you're going to get caught, right? You got to.
Would you bail me out, bro?
Yeah, give you the quarter to call me. So the party is over, and we have to understand that. If the last 13 years you did something successfully because the Fed was doing something, they're doing the exact opposite now. Central banks are doing the exact opposite now. So if you try to do the same thing, you're going to get destroyed. You know, the 13 years of easy money is over. We're moving to the next phase. I believe it's the sell the rip versus buy the dip, because distribution is happening.
Well, at least sell the rip will work at times where it never worked for much.
It didn't. No, it didn't.
Yeah,
it really didn't. So the key is, you know, when the market changes,
we're going to see volatility in currencies too. So
absolutely. And the key is when the market changes, you have to change. This is the thing. It's telling you it's time to change. You know, here's a couple quotes. You know, Starbucks got rid of their requirement. England removed all requirements. Switzerland. I mean, it's happening one after another. You know, we talked about that, but there's, you know, quotes and things from some of the people. Here's the Fed quotes. I mean, they're telling us what they're doing. We may not want to hear it, but they're telling us. I mean, look at Bullard's quote. We don't want to disrupt the markets, but remember, anything before a but means disregard everything I just said.
Discounted it all.
Right. We need to keep inflation under control. The economy is ready for interest rate increases to control rampant inflation. I mean, they're telling us, so we got to listen. Energy crisis too. I do believe, like in the 70s, we're going to experience another energy crisis, and are experiencing it now. Here's a couple of facts. Couple from the last.
My heater went out last night.
There you go. You have your own.
I'm doing an interview in an electric blanket.
So peak supply is happening before peak demand. That's a problem. Again, just simple economics. these green policies and ESG mandates are really, really affecting.
Here's my energy crisis, bro.
Last year, oil and gas discoveries were the lowest in 75 years. 75 years.
Yeah.
And I think government policy mistakes are only adding to the problem,
Yeah.
like whether shutting down coal plants or shutting down nuclear plants or canceling expiration leases. And the brilliant one that Joe Biden did was the Strategic Petroleum Reserve release. Let's see what happens when you do that. Historically.
I figure, yeah, right. Backfires.
I mean, it's not good.
Yeah.
It's not good.
Yeah.
So
I'm thinking there might be one interruption in the bull market if Biden can cut a deal with Iran and we get Iranian oil back on the market.
Yeah, but is that going to solve the problem of this?
No,
which is
just
discovery.
No.
Look at the levels of discovery. Just comparing.
No, long term, not at all.
It's a real problem. If we had the infrastructure in place to do the green energy and they were doing all these things, you could say, okay, we're going to make that transition. It's not there yet. The demand is still going to be there for this, the fossil fuels, but the supply is not. So
look at that production in 2020, and then or 2019. It was pretty good until the Saudis broke the frackers and they all went BK. And
yep,
what a strategy.
Yep.
Yeah. Okay.
So here's crude on a monthly basis.
Okay.
We are currently at I use these squares to sort of define price action, and we're currently at resistance. So I wouldn't be surprised if we get some sort of pullback. But again, this is a monthly chart.
Yeah.
It's not bullish. Where did pullbacks come? Site of previous highs.
Yeah.
Right? Previous lows over here. So, crude looks bullish. Doesn't mean it's going to go up today or next week. This is big picture stuff here, monthlies. Gas is another one. We talked about gas earlier in the year, made a nice trade there. It's bullish, longer term bullish. It's just breaking out of this base. The next move is we get above this, this like 540, 550 area and can settle above it. We're going, I think, to all-time highs.
Nice.
Let's look at the background weather for financial conditions, right? The Fed is hitting the brakes. There's no question about it. You can see this is the U.S. financial conditions indicator or financial conditions index. Well, everyone can say, oh man, look, we're still in easy money. You got to look at the direction and the rate of change, right? This thing's heading down.
Yeah.
And if this is the reason why we just had that huge run, then you got to change your strategy. The other thing,
think we're having a failing rally here? I just heard one comment. I know I'm taking up some of your time, but at the hedge fund conference last week, hedge fund trader woman said on that spike low a week ago on Monday, I'm so relieved. Don't you think that low is going to be taken out?
Yes, I think.
And is it going to be taken out before we make a new high?
That's a good question. I think the possibility of a new high gets more remote every day while it's still there. Maybe we could do some kind of false break high. Okay. I'll show you the pattern that we're following.
Okay, there's addicted to debt.
Yeah. So the Fed in this last recession, this COVID crisis, we've gone more in debt. The fiscal deficits were greater than all the previous recessions in 1980 combined. And we're getting the trap here is they need more and more debt to get the same response, and they're not getting the same response. They're getting a weaker response every time because you're piling on additional debt. And it's I guess the patient's getting numb, from all the heroin. So this is a problem, but we have to be cognizant of the fact that I think what's going to happen too is that the next crisis we have, the Fed's going to come in and they're going to really make the liquidity that we just had look like it was, a BB gun. And that's when inflation's going to go nuts, and the markets will too. Here's something I think it was yesterday you had someone on who was talking about correlations.
Oh yeah.
Here's a correlation between the Fed balance sheet and S&P.
Very
Remember,
tight.
one is perfect correlation, right?
Yeah.
0.933.
Yeah. Just had that little thing, a little deviation between 65.
Yeah. But think about this. If the Fed is reducing their balance sheet, where
They're
does
taking profits.
Yeah, they're taking profits. What does that mean for the markets?
Yeah.
If the correlation holds, it means markets are going to go down too.
Okay.
Bubbles everywhere. The latest example, you'll love this. You know the metaverse, right? People are buying things in the metaverse because it's it's going to be the
They're
next.
buying NFTs. Yeah.
They're buying NFTs. They're buying real estate. They're buying yachts. They're buying Gucci shoes. Virtual Gucci shoes. Yesterday, I heard that that metaverse mortgages are being issued to buy virtual land now. That's the bubble of bubbles.
Yeah.
I mean, come on. I think the metaverse is going to be something someday. It's probably like the internet was in the late 90s. But my God. So let's look at what markets do in a bubble, right? Doesn't matter what market, the pattern is the same, right? You see this, you see the pattern.
Yeah.
Where are we on the S&P now? Take a look at that. What does it look like to you?
Yeah.
Let's go back.
Yeah. Yeah. Interesting.
Yeah. So here's your failed rally, right? That signals the big move lower.
Yeah. Yeah.
So we're watching now. We're getting a bounce. Do we go higher? Probably. I don't think the next big leg down starts until the March timeframe, but it could happen anytime. And I think we get this. And then here's the bazookas from the Fed. And
so where do you think the Fed will come in? Is that around 2,600 in the S&Ps?
I think sub 3,000. Yeah, sub 3,000 they come in.
Okay.
Probably. We'll see.
Yeah.
I mean, it's all speculation here, but this is the path the speculative path we're looking for right now.
Yeah, so it'd be in magnitude bigger than the COVID crash.
I think so.
We're starting to run up against the clock, Ben.
Let's just go real quick. Okay. We'll run through. As I told you, inflation is here. It's staying. It's not going anywhere. This chart is really interesting. I found this one. It shows periods of inflation, deflation, inflation. This is cycles, right?
Yeah.
We're starting the next period of inflation.
Yeah.
We've started it. We've had the deflation and the run up. I mean, if you look at the 70s, here's that decade right there.
Yeah.
That's what we're going to do. So couple things, inflation markets, gold. I know you guys talked about it. This has been frustrating both bulls and bears. But if you look at it technically, man, we're just consolidating at these highs from 2011 and 2012.
Yeah.
It's bullish. When it's going to resolve exactly, who knows? It's bullish long term, though.
Okay.
Same thing with silver. Look at this. Here's the big breakout in silver, right? That we had in 2020. Look at where we're consolidating.
Where would that trend line come in that it broke out of if we went down to tag it?
On silver?
Yeah, that green line you have with that it broke out of.
Yeah, we're at about that. Yeah, I have support on silver now at around 21.
Okay. That line's lower than 21, but
yeah. It's right. It's in the upper 20s area, I think is.
You mean upper teens?
Oh, you're talking about where? Down here?
I don't see your cursor. So we had a trend break that we came out of. If it came, that's it. So if it came down to test the line,
it's a little over
the next
20.
Few weeks.
A little over 20.
No, go to your right.
Oh, down here.
Yeah, if it tested that, where's that?
If it tested that, you're in the teens. Yeah, you're in the teens. Yeah,
all right,
for sure.
Back up the truck.
Copper.
Yeah.
Triangulating.
3 drives to the top.
Right around previous highs, man. That's bullish.
Yeah.
Copper's bullish. Long term is bullish.
Yeah.
The grains we talked about, these things are gonna go higher.
Yeah.
I think we're gonna do a little bit of a correction, a little bit of pullback after this last run, but they're bullish.
Yeah.
Long term bullish.
Russia's and Ukraine's a big wheat producing area. Okay.
There's corn.
Yeah.
Bullish.
Okay.
Beans. Just hit resistance yesterday. Probably pulls back, but it's bullish, man.
Yeah.
We're going to all-time highs here.
20s.
Coffee. Nice run up.
Everything.
consolidating above the previous highs, bullish. Long-term bullish.
Okay.
Sugar, same thing. Pulling back, but bullish. Cotton, up and out.
Going to be wearing a leisure suit made out of polyester.
That's right. Cotton's going to be too expensive.
Back to polyester, John Travolta.
The one thing I'll show you that's going to go down.
All right. The bond.
30-year treasuries.
Where does that blue line come in underneath it?
Down here?
Yeah.
Yeah, that's pretty low. I think you can get down. I think you can get down to here, which is around 126 in bonds.
Wow. What would that yield be on a 30-year?
I don't know. I don't know what that would be.
Yeah.
I hadn't to do the calculation, but I'm
that
telling you,
that would crack the real estate market, don't you think?
yeah. I mean, this bonds are just set to, and this tells you that inflation's not going away.
And that's a big bubble. That's
Yeah.
bigger than any stock market. Bond markets are bigger than all the stock markets put together.
Yep, and that's popping. Just real quick, we did start a YouTube channel where we post weekly videos. So anybody that wants to hear what we have to say on a weekly basis, there's those videos there on the YouTube
Ben's
channel.
also a very good shorter term tactician and trader in the market. I know he gives big picture stuff here, but he knows how to handle an intraday chart. That's
true. We do that a lot. So I mean, listen, the key thing, protect yourself. Don't do what you did, for the last 5 years, 10 years, 4 years, last year. Things have changed. Recognize the change. Make sure you're disciplined.
And Ben walks the talk, because I was talking to him the other day about this presentation, and he said, Dale, can I talk about what I see? And he told me he has about 4 cans of beans, a few cans of tuna, and a sack,
a lot of peanut butter.
Yeah, a lot of peanut butter. So if you want to learn how to get prepped for all of Ben's scenarios, you just model yourself after him. And Ben, you know what? Even though it was, a lot of, uncomfortable things and times that are coming, it's all in our head because there were times when things were great for everyone else. And if your head wasn't right, it wasn't great for you. I could testify to that at times. Mm-hmm. And there'll be times where it's more difficult, but if you keep the right attitude, and you never know if you have faith till you need it, you could still, find peace and happiness. So that's my hope for everyone that's listening to this.
I agree.
Buy some peanut butter, get long commodities. And if you're a trader, this is not hell. This is nirvana.
Absolutely.
So, if you have trading skills, this is what you've been preparing for your whole life.
This would be the perfect environment. You'll be able to make money. You'll be able to support your family. You'll be able to take care of the people that are important to you. This is, as Dale said, this is going to be our Super Bowl, man.
You're portable. If you're portable, you could go anywhere, right?
Yeah. So it's not terrible. It's not terrible. You just need to be aware, and you need to be ready, and you need to be prepared, and you need to be disciplined. No more, no more bullshit buying the dip for just because it's dipping. Be disciplined and you'll be fine.
Like the Chinese say, what's a crisis? It's danger and opportunity. And the danger is you miss the opportunity.
100% agree.
So, all right, Ben, thank you so much, buddy. My trading warrior brother, and great to talk to you. And we'll be talking in the spring. See what happens. So
we'll see what happens.
Appreciate it, and retweet this interview to your heart's content.
I will. Thanks for having me on,
Get the message out, buddy.
Take care.
All right. Thank you, everyone. See everyone tomorrow. Remember, more than ever, don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.